Jamaica's financial leap, Caribbean clean energy push, and a new round of trade aggression. Hello and welcome to CBX Business News for Friday, July 11, 2025. I'm Yanil Wood. Thanks for joining us. Coming up locally, Jamaica joins FATF policy table after exiting grey list, marking a major milestone in the country's financial reforms. On the regional front, the Caribbean launches a multi-million-dollar clean energy investment facility aimed at slashing the region's $1.2 billion energy bill. And over on the global stage, Donald Trump announces a 35% tariff on Canadian imports, threatens Brazil with a 50% levy in a sharp escalation of trade tensions. Stay tuned as we unpack these stories and more right after this break.
Alphabet down 6, Microsoft down 5.
We're here to open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for Safe to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
I'm trading stocks to achieve my financial goals.
I'm also trading stocks to achieve my financial goals.
Start a conversation with the Jamaica Stock Exchange.
Check jamstockx.com for information and a list of registered stockbrokers. You can also call the Jamaica Stock Exchange at 876-967-3271 for information on how to begin. I am achieving my financial goals.
I'm achieving my financial goals.
The local news is brought to you by Darriman Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with the latest update on Jamaica's international financial compliance. The government of Jamaica has received the prestigious invitation to participate in the Financial Action Task Force's FATF's FSRB Jurisdiction Guest Initiative, a move hailed by the Ministry of Finance and the Public Service as a significant step forward in the country's financial reform journey. Extended by FATF President Elisa de Anda Madrazo, the invitation allows Jamaica to engage directly in FATF's policy discussions under its own flag for 1 year. Jamaica's participation begins at the FATF plenary in Paris from October 20 to 24, with additional plenaries and technical meetings to follow. The Jamaican delegation will help shape international standards on anti-money laundering and counter-financing of terrorism, AML-CFT. Now, Minister of Finance and the Public Service Favour Williams welcomed the opportunity, calling it a strong vote of confidence in Jamaica's ongoing financial reforms and a significant opportunity to contribute to global policy direction on AML-CFT. Reflecting on the country's journey, Minister Williams noted that just a few years ago, Jamaica was listed as a jurisdiction under increased monitoring. However, the country was officially removed from the FATF grey list in June last year. In a further vote of confidence, the European Parliament also recently removed Jamaica from its list of high-risk nations, reinforcing the country's improved standing in the international financial system. Meanwhile, Chief Investment Officer CIO of Morgan Stanley, Lisa Chalette, is encouraging investors to seize the current opportunities in the U.S. stock market, which she describes as a stock picker's market.
Notably, the recent rally has come even as valuations are extremely rich and CEO confidence remains low, while economic data like retail sales and ISM readings are currently disappointing. While we can appreciate the powerful appeal of the emerging bull case, our enthusiasm remains measured. A deeper analysis of policy implications indicates there's likely to be wide dispersion between the winners and the losers, a backdrop that supports a more active stock-picking oriented approach.
Ms. Chalet points to anticipated corporate tax cuts as a possible catalyst for economic growth, which could particularly benefit sectors such as technology, industrials, and energy. In this complex environment, Chalet recommends investors focus on stocks that show potential for upside surprises in earnings and cash flow.
Consider first the likely tax bill, which is emerging from the latest round of Senate revision. Elements of corporate sector stimulus include provisions around expensing R&D, the depreciation of CapEx, as well as additional leeway on interest expense deduction. These factors can certainly help boost earnings, improve cash flow in investment-intensive industries, and reduce effective corporate tax rates. Our MS & Co. analysts estimate that net stimulus from tax advantages could add roughly 50 basis points to GDP in 2026. That said, as positive as this may be for key companies, the aggregate gains would almost be fully offset by 2027 when the so-called pay-fors kick in.
The Morgan Stanley CIO also has further recommendations for investors to consider as they navigate these challenging market conditions.
Second, capital markets deregulation is also likely to be a double-edged sword. Consider work that's being done to reduce the capital requirements of the global systemically important banks. Lower balance sheet reserves should free up capacity for things like bank lending, investment, and shareholder buybacks, a positive for the mega-cap banks. That said, loosening these restrictions will likely intensify competition in credit-linked businesses where key segments, especially in private credit, are already facing declining returns.
Chief Investment Officer of Morgan Stanley, Lisa Chalette. Tropical Battery Company has disclosed the basis of allotment for up to 954,545,455 ordinary shares offered through its additional public offering APO, which was governed by the prospectus dated May 5, 2025 and closed on July 4. According to a notice posted on the Jamaica Stock Exchange's website, the prospectus established two share pools, a reserve share pool and a non-reserve share pool. The allotment methodology stipulates that applicants in the key strategic investors reserve pool will receive full allotment for their subscriptions. Similarly, all applicants from the non-reserve share pool will also be granted full allotment of their subscriptions. Now to foreign currency trading news. At the end of currency trading on Friday, the US dollar is selling for $161.20, the Canadian for $118.18, and the pound sterling for $216.97. The going rate for the euro is $188.20. Up next, trading news from the Jamaica Stock Exchange. 107 stocks traded on the JSE Friday, of which 37 advanced, 50 declined, and 20 traded firm. 138 Student Living Jamaica, Variable Preference, Main Event Entertainment, Access Financial Services, and Sterling Investments US dollar led today's winners, while the losers were led by Cygnus Real Estate Finance US dollar, A.S. Bryden & Sons Holdings, Salada Foods Jamaica, and R.A. Williams Distributors. The main index declined by 2,752.72 points, or 0.89%, to close at 306,271.41. The junior market index also declined but by 6.73, or 0.20%, to close at 3,403.06. In today's market education feature, we're taking a closer look at Pareto analysis. Pareto analysis is a decision-making tool based on the 80-20 principle, which states that 80% of outcomes often come from 20% of causes. It helps identify and prioritize the most impactful factors in a process, allowing for more efficient improvements. Commonly used in business, quality control, and economics, it is most effective when illustrated with a Pareto chart. The method is named after Vilfredo Pareto, who observed that 80% of Italy's land was owned by 20% of the population, a pattern he found repeated across Europe. And that's it for Market Education feature and the end of the local segment. Please stay with us. The regional business news is up next. The local news is brought to you by Derriman Trading. Better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses. And Pulse Investments.
Mikey, is what sweet you saw?
Yeah, dear babes. Where's the Cathy? Me and you go party tonight.
Party? You secure your future yet? Careless.
Did you know that over time the stock market has provided a reliably high return on investments? Be sure to contact a licensed stockbroker for more information on this exciting investment opportunity.
Taking care of business, Mikey?
Yeah, Cathy. I'm securing my future. Want to come look over my stock portfolio?
The Jamaica Stock Exchange, providing a fair, efficient, and transparent stock market.
Welcome back. Now to news from across the region. In a landmark move to reduce energy costs and climate vulnerability, Caribbean governments and development partners today signed a breakthrough agreement establishing the Caribbean Resilient Renewable Energy Infrastructure Investment Facility, CRREIIF. The new facility will mobilize millions of dollars in concessional and blended financing to fast-track the deployment of solar, wind, geothermal, and grid-resilient infrastructure across small island states. At the signing ceremony in St. Kitts and Nevis, Governor of the Eastern Caribbean Central Bank, Timothy Antoine, underscored the urgency of accelerating clean energy investments across the region, revealing that the region's energy bill amounts to a staggering US $1.2 billion annually.
The fact of the matter is that we're spending $1.2 billion a year on our energy bill. The fact of the matter is that we are paying between 35 and 40 US cents per kilowatt hour for energy. And by the way, if you compare that with Mexico, for example, that is paying less than 10 cents, probably about 8 cents, you begin to understand why, notwithstanding how beautiful we are and how warm we are as a people, some decision to go to Mexico rather than the Caribbean because the room rates are cheaper.
He further revealed that nearly $500 million of the energy bill must be drawn directly from the region's foreign exchange reserves.
Out of that 1.2 billion, we have to find close to 500 million US dollars out of our foreign reserves on an annual basis to pay for energy.
Governor of the Eastern Caribbean Central Bank, Timothy Antoine. Hess Corporation has announced its decision to exit offshore Block 59 in Suriname just 2 days after the country elected its first female president, Jennifer Gerlings Simmons. The U.S.-based oil major's withdrawal marks the latest setback for exploration efforts in the deepwater block, which has faced mounting drilling risks and the departure of key partners. Hess, following ExxonMobil and Equinor, chose not to proceed beyond the initial exploration phase, citing high technical and financial risks in the ultra-deep water environment. Despite extensive seismic surveys, the challenges of drilling at depths exceeding 2,700 meters have deterred further investment. The company has officially returned to Wright's Suriname state oil company, Statoil, which is now tasked with finding new partners. The timing of Hess's exit is notable, coming just 48 hours after the historic election of Gerlings Simmons, a physician and former parliamentary speaker who secured the presidency with a broad parliamentary coalition. Her administration inherits the delicate task of managing the nation's burgeoning oil ambitions alongside pressing fiscal challenges, including approximately US $400 million in annual debt payments. Freeport Oil Company Holdings Limited, FOCAL, is on track to exceed its 2024 earnings after posting a net income of $20.1 million for the first half of fiscal year 2025, positioning the energy provider for another record-breaking year. President and CEO Dexter Adderley says the second half of the year is typically stronger, and the company is gaining momentum from key infrastructure projects, chief among them the installation of a fourth 30-megawatt GE gas turbine and construction of a new LNG storage and regasification facility at Clifton Pier. The LNG project, launched in March 2025, is backed by a nearly $100 million loan from the U.S. Exim Bank, arranged with Banco Santander. FOCAL's employee share ownership program is also bearing fruit, with over 250 staff buying shares at $5 each, now trading above $6.15. Internally, the company is nurturing talent through its Emerging Leaders internship, focused on science and engineering. Chairman Sir Franklin Wilson says the Bahamian-led company is setting a strong example for sustainable, inclusive national development. Adderley adds, the progress we're making now is just the beginning. Now to trading news from the TTSE. 23 securities traded on the TTSE Friday, of which 6 advanced, 9 declined, and 8 traded firm. Leading the winners were Angus Tour Holdings, Unilever Caribbean, Massey Holdings, and Prestige Holdings, while the losers were led by MedCorp, National Enterprises, NCB Financial Group, and One Caribbean Media. Other results include the All-TNT Index declining by 2.51 to close at 1,492.48. The Composite Index declining by 5.28 to close at 1,020.89. And the Cross-Listed Index also declined, but by 1.15 to close at 72.28. The SME Index declined by 5.04 to close at 91.33. And we go for another break, but please stay with us. Nielsen Rose is up next with our International Business News segment.
welcome back, and thanks for staying with us. In the international news today, U.S. President Donald Trump has announced a sweeping new trade measures, unveiling a 35% tariff on Canadian imports starting August 1. He warned that further levies could follow if Ottawa retaliates. Brazil was also targeted with a threat of 50% tariff on its exports to the U.S. In a broader move, the White House confirmed that tariff warning letters were sent to at least 14 other countries, including Japan, South Korea, South Africa, and several Southeast Asian nations. The proposed tariff ranges from 25% to 40%, with the administration citing trade imbalances and national interest concerns. The aggressive stance has sparked fears of a renewed global trade war, with markets watching closely for potential retaliatory measures. The British economy contracted by 0.1% in May, following a sharper 0.3% decline in April, and missing market expectations of a 0.1% expansion. The consecutive monthly declines have heightened fears of a potential overall contraction in the second quarter. Industrial production was the main drag, falling 0.9% after a 0.6% drop in April. Manufacturing output slipped 1%, driven by steep declines in the production of basic pharmaceutical products, down 4.2%, and transport equipment down 1.3%. Mining and quarrying also fell by 3.2%. However, there were modest gains in utilities. Water supply and waste management rose 0.8%, while electricity and gas supplies edged up 0.3%. Construction output declined by 0.6%, reversing April's 0.8% growth. On a more positive note, the services sector grew 0.1%, rebounding from a 0.3% fall in April. The standout performer was the information and communication subsector, which surged 2%, largely due to strong activity in computer programming, consultancy, and related services, up 3%. Despite the monthly setbacks, GDP grew by 0.5% in the 3 months to May, offering some cushion against a broader economic downturn. Canada's labour market delivered a surprising jolt of strength in June, with employment rising by 83,100, nearly 10 times May's modest gains of 8,800, and far surpassing expectations of a flat reading. The surge was driven primarily by part-time positions, up 69,500, though full-time employment also edged higher with 13,500, signaling broad-based resilience across sectors. The biggest job gains were seen in wholesale and retail trade, as well as healthcare and social assistance, reflecting ongoing demand in consumer-facing and essential services. However, agriculture continued to struggle, shedding 6,000 jobs, or 2.6%, while employment in most other industries remained stable. Provincially, the labour market showed strength across most of the country. Alberta led the way with a 30,000 job increase, followed by Quebec, 23,000, Ontario, 21,000, Manitoba, 8,500. In contrast, Newfoundland and Labrador were down 3,500, while Nova Scotia lost 3,400, posting the biggest declines. The robust job growth helped nudge the unemployment rate down 6.9% from a near 4-year high of 7% in May. This improvement defied forecasts of a rise to 7.1% and marked the first decline in the jobless rate since January. The number of unemployed Canadians fell by 22,100 to 155 million, while total employment climbed to 22.6 million. And finally, global markets ended a choppy week with key shifts across commodities and currencies. Crude oil prices rebounded, gold extended its rally, and the US dollar gained strength, reflecting a mix of geopolitical tensions, shifting demand forecasts, and resilient US economic data. WTI crude futures rose to above $67 per barrel, while Brent crude climbed above $69, recovering from earlier losses. The rebound was fueled by short-term demand from summer travel and power generation, even as the International Energy Agency, IEA, warned of a political supply surplus later this year due to rising output and softer demand projections. In the meantime, gold prices rose for a third straight session, reaching around $3,330 per ounce. The rally was driven by safe haven demand amid escalating trade tensions, particularly after President Trump announced a 35% tariff on Canadian imports starting August 1, with broader tariffs on other trade partners expected. In the meantime, the US dollar strengthened against major currencies, supported by stronger than expected labor market data and growing expectations that the Federal Reserve will maintain higher interest rates. The greenback's rise underscores investors' confidence in the US economy's relative strength compared to other regions. And those were your international business stories. After the break, join Neil for your recap.
Wealth is not simply counted in dollars or cents, but in the time we spend with love, in love, giving love. Wealth is not simply a means to an end. It is the means to live out loud. Wealth is more than money. It's about family, the memories you create, the legacy you leave behind, and your ability to enjoy life in the moment. It's also about seeing the QMAX possibilities and seizing investment opportunities to achieve the future you want and deserve. Which is why QMAX Wealth will focus on your investments so you can experience more. Because true wealth is truly more. To start investing today, call 876-926-7767.
Welcome back, and now to recap our top stories. Jamaica joins FATF policy table after exiting grey list. Regionally, Caribbean launches major clean energy investment facility to tackle $1.2 billion energy bill. And on the international scene, Trump announces 35% tariff on Canadian imports and threatens Brazil with 50% levy. Those were the stories making today's CBX Evening News. On behalf of Nielsen Rose and the entire production team, I'm Neil Wood, wishing for you a wonderful weekend. And thank you for watching CBX, your region, your business, your source.
I'm Gabrielle Burgess, CEO of Sugar Lifestyle. You're watching CBX